Hello, everyone. It is June 3, 2022, and you're watching the Awesome 10X live market update. So, let me begin. Wait up. Okay. Um, okay, wait up. Share screen. Yes, I'm sharing my screen here. And wait lang let me tell people. Um, Please just watch the class through YouTube. I'm gonna streamcast today's class. Awesome 10x YouTube. Got it. Okay. So let's begin. Okay. All right. Title says Take Profits and Run, plus How to Trade Options for Beginners. You're watching me June 3, 2022, Nikki U, CMT. So, a few things. Why would you want to trade options in your portfolio? You might be a beginner now, but I would tell you that options will help you to manage your risk. You could construct unique trades with favorable risk reward ratios if it's going to be a range trade, it's going to be a trend trade. You can reduce the cost of an investment, i.e., you don't need a lot of money to actually implement options in your position. You will benefit from the leverage given by options efficiency and the flexibility given rather than simply owning 100% stocks. You can also, of course, take advantage by the passage of time. Over a few months or over a few days, sometimes the stocks would decay, i.e., the premiums of the options would decay, and if you are selling options, i.e., writing premiums, you could take advantage by that passage of time. You could, of course, improve your probabilities by enhancing your stock portfolio in adding options. So let's begin with the beginner stuff. Most people know how to buy a stock. Well, owning shares is simply buying a call option. The difference is that when you own a share of a stock, it's usually just one share. When you buy a call option, you are doing buying 100 shares. Take note, one call option is one contract, and one contract is equivalent to 100 shares. Therefore, if you pay that options premium, what is that? It is similar to owning shares of the stock. You are saying that the option is that you are willing to buy that stock. And the difference is that the stock today, if you buy 100 shares, it does not have an expiry. When you buy an option, i.e., a call option, you have an expiry date and you have a strike price. The strike price is the price that you will pay for that stock. The option is the premium you pay to buy that stock at that price at a certain expiry date. Now, your entire risk is, of course, the option premium. We will go through the examples later on, but bear with me. If naguguluhan ka rito, examples would help you out. Now, if you can buy a call option, you can obviously sell a call option. Selling a call option, do you have to sell a call that you don't own? Can you short it? I.e., can you sell a call without owning shares? Yes, selling a call is simply writing a call. When you write a call, you then receive that options premium. You become something that acts as an insurance policy wherein if you sell a call, that means that you are selling the position. Example, if Tesla goes $1,000 and you sell a call option wherein the strike price of Tesla is $1,000 at an expiry date, for instance, of July 1, 2022, you will receive a premium and you have the obligation to sell the position of Tesla at $1,000 by July 1 if that is the option that you took. Now, what is the risk? Of course, if you sell a call option, you don't have Tesla shares. If Tesla suddenly went $1,000 or above $1,000, somebody's gonna collect those Tesla shares at 1,000, and you have to make sure that you are giving that 100 shares of Tesla at 1,000. Now, selling a call is also known as being short the position, i.e., you are bearish, you are being short that stock. A put option, let's talk about calls and puts. We talked about the call, buy call, sell call. Those are the most beginner parts. This is also a very beginner option analysis. What is a put option? It is simply a contract that gives the owner, if you are the buyer of the put, the ability to sell the stock at a set price, the strike price, at an expiry date. Example, today is June 3. You want to sell positions on Tesla at $1,000, even if Tesla today is trading at $750. If you have a put option, you own a contract, buying that put option, a 1,000 strike put option on Tesla, automatically means that if example, June 3, 2022 expiry, on June 3, you can exercise your put option to sell your Tesla shares at 1,000 even if Tesla today is 750 because you own that put. You are able to sell. Obviously, 1,000 minus 750, intrinsic value of your put option is $250. So obviously, if you bought the 1,000 put, say, a few days ago, when Tesla was trading at $1,000 around March 30, 2022, then that put option has increased in price because Tesla has fallen down from $1,000 to $750. Owning a put is owning an insurance policy on a stock. Why do people buy put options? It's because they're willing to pay today a price for the contract just in case Tesla goes down, so that if Tesla fell down below the strike, they can continue selling the stock at the set price that they implemented that. So usually if you own tons of shares, you will buy a put option as an insurance policy if the market is looking toppish, if the market is looking bearish, if the market is looking to collapse. When you buy a put, you pay for that premium. You do that because you are bearish the market. Therefore, the people who are bearish the market, most of them have been buying put options over the last 2 months or over the last 6 months. Now, can you sell a put? Writing a put option? Yes, you can. Selling a put means that instead of you buying, you are collecting. Somebody buys your put option, you are the one telling this person, hey, if you want, I could be the one that will sell a put option, receive the options premium, meaning I collect the profit. You are in fact bullish. Why would you sell a put option? All right, let's assume by July 1, 2022, next month, you think that, okay, what if I sell a put position on Tesla at $600? Today, Tesla's trading at $750. You can, of course, collect a premium selling a put. What does that mean? By selling a put option, you are giving somebody the right to sell these Tesla shares at $600 because you believe that Tesla's not going to go below $600 within the next month, within July 1. Your promise is that if Tesla goes down at 600, don't worry, dear ma'am and sir, I will be the buyer of Tesla at 100 shares at $600 strike. Selling a put position, therefore, means that you are the insurance company, you are the buyer, i.e., you are the last resort buyer of the person who is selling that Tesla at 100 shares to you. Now, when you're selling a put position, your risk is what? The entire shares. 600 strike times 100 shares is $60,000 notional value at risk. And how much did you make for that selling of a put option? You're collecting a profit. You are taking the premiums today. Let's assume somebody, when you sell a put option on July 1 Tesla, somebody's willing to give you $30 for it. Will you want to take that $3,000 today to be the last resort buyer of Tesla at 600? You are the insurance company. You are collecting the premiums. That therefore tells you that you are a bullish position taker. Selling puts will make sense if and only if, number one, you want to own the stock. Number two, you actually believe na, well, Tesla's not actually going to go down $600. Actually, I just collect that $3,000 strike and the $60,000 will never get exercised because if 1 month from now you think that Tesla's going to stay 750 or above $600, nobody in his right mind will actually exercise that put option because why will he sell to you Tesla at 600 when he can just sell it at market at $750? So selling a put option is very convenient for whom? For somebody who wants to collect that share and for someone who believes that that share isn't going to fall 50% down 1 month from now. 1 month or 2 months from now, depending on the expiry date that you wish to do. Selling a put position, what's the risk here? The risk here is unlimited. What if within a month, what if you made a sell put option on Tesla at 600 and Tesla collapsed to 500? You are obligated to pay at 600 even if the actual price is $500. That is your risk, such that if Tesla falls below that strike, 600 all the way to, let's say, 500 or 400, that entire risk, 600 minus 400, that $200 difference is your downside versus the collected profit. Let's assume that you collected a profit of $30. You only collected $30 versus a downside risk of about $100 to $200. So you have to estimate whether collecting the profit or the premium is worth it versus selling a put option. Whether you decide to buy or sell options will depend on whether option prices are high or low. When option prices are high, you tend to want to sell the premiums. You want to collect the premium. How high is an option price considered high? Obviously, if it's about 10, 20, 30% yields, we believe that the option price is high. When is it low? I think that any price below 5% yield within a 1 month expiry is technically low. So even if you are contrarian buying that call option or contrarian buying that put option, you have to consider the trade-offs. Usually, buying and selling put options, it makes you profitable if you only do it on extremely overbought or extremely oversold. If you are in the middle side, it does not make sense for you to buy or sell options. This you're better off not trading options if it's not in the extreme buy, extremely overbought or extremely oversold region. Now, today is Friday, June 3, 2022. It's gonna be the second week of gains in the market if this market will continue going up. So we've rallied last week, but take note, we have been rallying since May 12th. So today, let me just speak this in Tagalog and then I'll translate it to English for those non-Filipino viewers here. Pwede today biglang mag-reverse yung market. Traitor tong rally na to. Maraming magte-take profit, lalo na yung mga traders na since last week pa lang, nag-all-in na yan sa market. Traiduran time sa Friday. Mamaya, 9:30 to 10 p.m., pwedeng lahat mag-press ng sell button. Posible yon. Sinasabi ko lang yung totoo. So yung mga naka-cash, alerto na kayo. Baka mamaya, perfect shorting day. Watch lang. Use me as your indicator. Usually talaga ako, personally, pag nagsa-snapshot ako, 12K dollar gains, 10K dollar gains in a single day, alerto na. Malapit na mag-take profit si Indoy Inday. And I'm not talking about myself, I'm talking about the entire world. So walang kwenta guys yung mga unrealized gains na yan. Diretsong take profit to the bank kapag gusto mo. Pwedeng lumulutang yung profits nyo ngayon. Paper profit lang yan. Make sure you press your take profits kahit partial. Wina-warning ko lang lahat ng greedy people dito, hoy, why am I saying that? Let's take a look at the Nasdaq. Your Nasdaq has rallied 11.5 to 12.8. You're seeing this previous resistance, this previous support at 12.988 will act as your first level of resistance. Hindi mo kailangan i-maximize all the way to 13.5 or 14,000 in a bear market rally. You've already bounced. 11.5 to 12.8 is how much of a rally? Nasa mga 10% rally na yan. For most traders, they will lock in or naka-trail stop yan. So, if you're happy with your profits, I would say take some profits of these levels because even your RSI has gone from oversold to slightly within the less overbought region. It is not yet overbought. Pwede ka mag-extend all the way here to 75 RSI. Pwede yan dire-diretso, 13.5 or 14,000. But it is highly prudent to take profits as you go higher. You scale out. 12.8, 12.9, 13.5, 14,000. You should be scaling out at least partial. What does that mean? On the SQQQ side, those who are shorting the inverse funds, they know that from $65 here, we have already fallen down to 45. That means that from an inverse fund standpoint, some people will start hedging their risks at 45, $40, or 35. How will they hedge their risk? If they are highly long position into the market, they will start buying some SQQQs here at 45, 40, and 35. Why should you do that? It is a precaution because the market obviously has gone from 70 to about 40 here. Of course, it can go 40 and $30. 30. The RSI can go continuously down, i.e. the market can continuously go up. The SQQQ is an inverse fund. It falls when the market goes up. It rises when the market goes down. And you can see that you can trade this effectively. It has been giving a lot of trading opportunities, 28 to 52, drops back to 31, rallies all the way to 60, goes down back to 44, could go down to 35. How you navigate 2022 has nothing to do with buying and holding. 2022 is a trading year. You make money buying and selling, buying and selling, buying and selling. You have to know your trading ranges, and the highest probability is when you are lower here at about 45 to 35, you should start being careful, i.e. you do not chase this rally. If you are late, you might as well, if you are long, if you're going to go long, make sure that you have ability to handle any potential drops in the market. Now, I'm going to also tell you about this inverse fund FAS. Let's assume, well, FAS is currently the inverse, sorry, it's not here. Let me post that FAS. Guys, nandyan pa kayo? Okay. Let's go to the FAS. FAS is the inverse fund of the financials. Our view is that the banks will have a harder time over time because of a potential recession. The business is not going to do so well, such that the bank loans will not do so well over time. So our view is that this FAS, which is the inverse fund, the financial bear should potentially go up. And we have been bullish at $16, at $18. We take profit here at about 27, 28, only to potentially buy back here at 21.5 or all the way to 18. You guys here with me still? Andyan pa ba kayo, guys? All right. Hi, Nikki. Hi. Hello, Akim Bala. Thanks for those watching. For those watching, please don't forget to like and subscribe our channel. Yes, this is free every Friday. Okay, so fast, we're talking about the fact that the markets are not necessarily overbought, but it is not oversold either. So for a good trader there, you have to be of the opinion that you might actually get a potential support here on fast at 21.5 or here at 18 or here at 16. So what you want to do is have 2, 3 levels of buying, right? You're buying somewhere here at these levels, 1, 2, 3, 17, 18, 21.5. So today, what you will do is to protect your long position. Your portfolio is currently long. You don't have any shorts yet. I'm not saying that you have to automatically hedge your portfolio, but you should assume that this market is toppish. And so if you think that it has a cap upside, it means that the FAS, you're looking to buy 2150, buying 20 or 19. So how do we do it? We can buy a call option FAS to protect us. Remember, we are of the view that this is a bear market rally, and we have no idea if today the rally ends or next week. How will you actually make a protective position on your portfolio? You can buy a call fast, and just like all call options, it's a defined risk. So it's a defined risk. How do we do that? Okay, let's go to our interactive brokers out there. I'm going to talk to you how to manage your risk via call options, inverse funds. You can do that. Let's talk about that. Let me just log in first. Okay, so for those who are using interactive brokers, I use interactive brokers, but I am not affiliated with them. I use it so that I use it because it is cheap. That's about it. Okay, let's go to FAS. How do you implement a potential hedge in your position with a defined risk? Let's assume I can only take in $1,000 of risk. Can I lose $1,000 to buy an insurance just in case the market stock? Okay, I can do that. We usually use 45 days. We like the 45 days to expiry so that we have a comfortable arena to become right. We don't want to be right in 2 weeks. Let's give us about 6 weeks to be right. So FAS, July 15, we're going to go for the expiry. We're looking to buy, so we could buy a $20 call option. Right now, you could see that the $20 call option is trading at 2.8. So at 2.8, that means that one call contract is $280. Okay? I could do that, or I could just buy this one, the 21. That's an at the money call option. It's $2.30. At $22 is $1.90. So let's assume I'm willing to lose about $200. I can do this. So buy this, trade $230. So you buy one, 2.3. So I just buy at market. Usually I'll buy 2.1. I'll buy 10% limit price. Okay, so let's try to buy a 2.1, although I'm willing to modify that 2.3 all the way to $1. So good till cancel. Okay, let's discuss what I just implemented today. This FAS is a 21 strike call on July 15, 2022. What it means is that I have the option to buy FAS until July 1 at the level of $21. Okay? Now, obviously, if FAS goes down below 21, that option is meaningless, right? It just goes to zero because why would I buy at $21 if the price of FAS on actual date on July 1 is $20? Why do I want to take that risk? Because I think that there's actually a lot of buyers on FAS here that will try to protect their portfolios, i.e., they think that JP Morgan is gonna have a harder time. What is the largest financial firm in the US? You've got JP Morgan trading here near resistance at 135. You've got Bank of America trading shares here also at about 37, 38. It's all a downtrend. You're looking at Goldman Sachs. Let's take a look at the financials. Our view is that all these banks are bearish. Goldman Sachs down, Bank of America down, Wells Fargo down. You've got Morgan Stanley down. So these are all XLFs. Now, because we are degenerates, we don't like to just short XLF. We want the triple bearish financial fund. That's why we are going through FAZ. So with FAZ, we are not stupid people. We're not gonna take a risk without defining how much insurance we're willing to lose. With this call option that I just implemented to you straight in your face, how much is the total risk that I'm getting? $2.30. That's just $230. Okay. How much upside do I take if I am correct? If I'm correct that the market actually collapses and goes all the way to $26, right? What happens to the risk reward there? Let's talk about the risk reward there. If 26, 21, what's the intrinsic value? Automatic $5. That means my 230 automatically jumps to $5 even if I don't add the volatility premium. But usually, if we can hit going up before July 1, i.e., let's say if this fast straight goes 24 on June 16, let's say just 1 week from now, this rallies to 24. Don't you think that the 2.3 call option automatically goes up? 24 minus 21 is $3 plus the Vega, the volatility. Option Greeks tayo. You pay a huge amount on implied volatility for FAS. Usually the volatility IV rank here, look at that. Historical volatility is 80%. Right now, you're able to buy it at a very cheap volatility. Should you take it? Of course, the answer is yes. The reason why you buy a call option is when there is a very low volatility, very low implied volatility. You don't buy when the implied volatility is very high, even if you think that you are right. Okay? So that's one thing that we can do for FAS. All right? We are doing that, buying a call option. Now, let's assume that I don't want to just risk $2. I want to risk more than that. We can. Actually, this 21 call can be bought 2.3 all the way to $1. Okay? So we can just buy several days if we get the market to continue going up and up and up. When will FAS go down? If the markets continue to go up and up and up, which can happen. Guys, the market can continue going higher because the market fell 8 weeks down. This is just going to be the second week of up. So we can go up next week as well. Jamie Dimon could be right. He said JP Morgan can be resilient. Maybe 132 goes $140. If that happened, Do you think that this resistance can continue going higher? Yes, it can. This is the next resistance. Here from 132, it can go 145, another 10% rise. That means if the market goes up 10%, JPM, the FAS, might go from 21 minus 2, it could go 19, can go 18. What happens to your 21 call strike? This 2.3 can go collapse straight down 50%. So usually guys, when I buy a call option, I will buy 230 all the way to $1 because I can take a $230 risk or a $100 risk. The defined risk is how much I paid for that call option. Okay? It's an insurance. It's a risk, but I accept that risk because the reward is also magnanimous. Okay, now let's talk about more things. Semiconductor bears. All right, AMD and Nvidia has rallied already to the point that your semiconductor bear has gone down from $62 all the way to 38. Let's take a look at that. Why did the semiconductor bear go down? Because AMD rallied all the way from 85 to 108. A spectacular trade on the long side, but be careful because if you don't look at your resistances, you are looking already at 113 and 125. There are several ways for a beginner to make sense out of this. I said that if you are looking to be bearish, you could do several things. Number one, what could you do? You could sell a call. You could sell an AMD 125 call. You could buy an AMD 125 put. Now, the thing about these areas is that selling call option is risky. Because what if AMD suddenly goes $130? Now, buying a put option is a defined risk. Selling a call is an undefined risk. So it all depends on how large the premium is given to you. How would you know whether you should sell a call or buy a put? It all depends on the price. I always say it all depends on the price. So let's take a look at the July 15. What is the price of the 125 puts, guys? Da 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 da. Let's see. It says here that the price is 18.5. That is above 10%. That is quite expensive. So I wouldn't buy just yet on AMD puts unless I could buy it at 12.5. So even if I want to initiate a sell order on AMD, I need to see that the put option is cheap enough, i.e. 10% below yield. This is above. This is a 15% yield on the 125 strike. So that is still very high. I would rather just wait for my put option to get implemented. So just post your buy puts for July 15, 2022 if you think that this bear market rally is getting toppish. Now, how about selling a call? Okay, if you sell a call, the premium given to you is just barely anything. It's just $2.26. It's less than 2%. Would you really want to get $2 for the chance to sell AMD at 125? Some people would kasi they're beggars. They would rather just get a 2% premium. But I think usually it's best to sell a call when you're getting at least 5% yields. I.e., if this was $6, then it makes sense. So what I'll do here is sell a call option. It's now $2. I'm sorry, but I will still wait at $6. You're writing a call. What this means is that I allow you to get AMD 125 shares if you're gonna pay me today at $6. I.e., you better pay me a high yield if I will sell a call to you. So, will this get done today? The sell AMD calls or the buy AMD puts? Probably not today, but we have time to wait maybe next week, maybe next week, and so on. Options is a probability game and it's also a preparatory game. You don't have to build your, it's like chess. You're building your stack already or your scenario analysis for next week, even if it hasn't happened or materialized yet. That's why options is wonderful. All right, so how about semiconductor bears? We're seeing that AMD is stoppish. We're also seeing NVIDIA is stoppish, right? AMD and NVIDIA look stoppish here. NVIDIA has a resistance at 205 to 220. Why do we know that? Because the previous buyers here at 220 are your resistances here. The sense of role reversal. So look at AMD and NVIDIA. All right, NVIDIA 220 is a resistance. If you want to short NVIDIA, okay, you want to short NVIDIA 220, there's several ways to do so. Either sell 100 shares of NVIDIA at 220, you will need $220,000. Sorry, $22,000. 220 times 100 is $22,000. Or you could just simply buy a put option and get the same risk reward profile. So the $220 here, how much would the put option be? The $220 is asking you 28.82. Let's say I'm willing to buy but only 10%, no? So 22. So it's still high for me, mataas pa yung limit niyan. So I'll still wait. But yes, I'm willing to pay a put option on Nvidia for the ability to short Nvidia at 22. So submit by order. Teka lang, may nagahang ang aking nagahang, frozen. What the hell? You can wait. Wait. Okay, my portal is having a frozen problem. You guys are still there? All right. That is one way. I usually teach people to buy a put option near a resistance but pay only 10% or less. Sometimes we get lucky, we can pay $11 put option or on it. But nowadays, it's quite expensive still. So we're still gonna wait. So yeah, not yet able to do that. Okay, I think my portal is getting frozen, so we'll just wait. All right, so you can see that the sell call on NVIDIA is $5. It barely gives you 5% yield. So I would also wait it out. If I want to sell call on NVIDIA, I need to get an $11 premium there at the very least. Okay, so right now, it's not okay. It's not giving you a lot of good yields. So you just post it, no? You buy a put order, 22, limit price, GTC. All right. For those who are wondering, how much is the risk that I just did for buying an NVIDIA put at $22? The total risk is $2,200. Okay, if you buy a put, it off for just $2,200, I'm able to get the same risk reward profile as somebody who is shorting 100 shares of NVIDIA at 220. Why do you want to short the shares, if ever? Because you see that it is a resistance. Why do you buy a put? Because you are bearish. If you aren't bearish, then you don't do that, right? Okay. All right. So that's one. You can also do, aside from NVIDIA and AMD, simply buy a semiconductor bear. This is an inverse fund. So a lot of people, they can see the support of inverse fund as 31, right? So here it's 38. What if they want to buy somewhere here about 31? All right. You can simply buy a call option, right? So SOXS, let's go there. SOXS, click the semiconductor short. Okay, you go to the option chain. You can see the support is 31. So you buy a call option around 42 days again. You buy somewhere at $30. You want to buy a call option. All right. Right now, the semiconductor already has an intrinsic value of $9, right? 30, 39. So you cannot buy it very cheap, correct? So usually, I would like to buy near the support. So I would buy near $3 or $4. So you can see that even on this semiconductor calls, I couldn't buy it because it is still quite high. So I'll try to buy kahit na $4. Usually if it's mataas, 9.6, tinatansya ko rin yan, tansya, estimate. Usually I try to buy 50% below of the current price when I see it's nearing the top. It's not necessarily the top, but it is nearing the top. So you just buy there, you post there, submit a buy call on SOXS 4.8. That is a $480 risk in case that I can ultimately buy a put option on semiconductor bear. Now, I can also, of course, just do something like, all right, let's say if I think that semiconductor, it might not fall all the way to, SOX S might not fall all the way to 31. What if I think there might be a lot of buyers already here at 36, right? I could just buy a 36 call here, right? I can just do 6.4, I buy a little, and then all the way to $3.20. So you could buy a protective put, a protective call option on semiconductors. You buy $6. That is a risk of $600. All right, so let's say 6.4, just the last price. We try to buy there. Submit by order. Accept. So I'm willing to lose $640 if I'm wrong. That's basically what it means. If you buy a call option, 6.4, it will only print money if the bearish fund actually goes up, right? It has to go above 36 within July 1. So it has to go 41, 42, 45, etc., etc. Okay, so that is one way to help yourself when the market is nearing the top, or you're thinking that, all right, the bears might actually be a good way for me to buy some inverse funds today. So this is your FAS, the semiconductor bear, 21 to 16. We look at the potential buying area there. Now, the QQQs, all right. What if you just want to buy a put option, the QQQs? Look at the positioning right now of the market. The QQQs have rallied from 280 all the way to 315. The first resistance could be somewhere here at $330, right? Or 335. What you could do is buy a QQQ put at 335. You can sell a QQQ call at 350, or you can do the same combination. Do you just need to buy a put and sell call, or could you just do a buy call, sell call, buy put, sell put? This is a combination trade. This combination trade is often done by strangle players. It might confuse you if I give you jargon in terms like strangle, straddle, iron condors, or spreads, bull call spread or bear put spread. But what you're seeing here is a simple thing. Actually, this is simply a combination of bullish calls and bearish puts. The buy call sell call here, buy QQQ call at 300, sell QQQ call at 350. What do you call this? This buy call sell call is what you call a bullish call spread. This buy put sell put is what you call a bearish put spread. You combine a bull call spread and you combine a bear put spread. Tara, you have an iron condor. Anyway, it doesn't matter whether you know the jargon. What is important is you know how to make money from these trades. Right now, you can see that 315 is nearing. Is it near a support or is it near a resistance? Actually, it's in the middle side. So it's very hard to do anything in the QQQs. So here at the middle side, I'm still gonna just wait and see the market. Because it is neither here nor there. It is when you are in the neither here nor there status, you are in a complicated status. You are in the friendship zone. You are neither here nor there. Hindi kayo lovers, hindi rin kayo haters. Okay, so when you are neither here or there, here's what we do. Let's go to the QQQs. Let's talk again about the options chain here. Um, let's look at the options pricing to be sure kung tama ba na cheap or expensive. Let's go to the July 15 again. Look at the 45 days to expiry. So we look at 335, the resistance, no? Okay, what if we buy a put option at 335? How much would it cost us? Let's take a look. Okay, the 335 puts will cost us $25. So technically speaking, pasok siya sa 10% yield component natin. It is not expensive, it is not that cheap either. So if you want to actually buy a put option, pasado na siya. Actually, yung $24, pwede na yan because 335 minus 312 is already $23 of intrinsic value. So medyo nasa pwede na. It's not that expensive. So pwede mo bilhin yan, $24, you buy a little, 335 minus 24 is 311, no? So medyo mura. Actually mura yung put option ng QQQ. Okay, so we buy a put. How much risk does this take, guys? It's $2,400. What happens if the QQQ goes from 312 all the way to 335? 24 goes down to 0, right? What if 312 goes to 320? 335 minus 320 is 15. 24 goes 15. Actually, what I'll do is 24 all the way to 12, I will buy. So, gagawin ko yan. Submit by order, accept, and then use on this order, $2,400 at risk. Isa pang trade, buy order, buy a put, $12. Of course, that's how I usually do it. So I'm just teaching you how I do it. Okay, why did I do that? In case you're wondering, why are you buying a QQQ put, Nikki? A QQQ put will ensure to me, guys, that if this market collapses from $314 to $300 simply by profit taking, that put option will print money to me in the short term. It will protect my portfolio that is long. Okay? So that's why we are buying some put options to hedge ourselves. With the risk that if the markets go up, what happens? Then those put options will decline. But as long as I'm willing to take that $2,400 risk, I can do it. That's why I waited 45 days. I use the day to expiry 45 days so that I can have 45 days to be right. That's what it means. Okay? Let's go further. Slideshow tayo. Um, okay, so your call spy. All right, let's say you don't care about the Nasdaq. You're looking at the S&P 500. The S&P 500 is 417. You're looking at the potential resistance from 430 to 450. We want to protect ourselves in case we're nearing a resistance. What do we do? All right, let's go again. Let's take a look at your SPY. How much is the 450 SPY put option? Spider, SPY. S&P 500 Trust. It's trading at 417 today, correct? Bakit Mexi? Teka, SPY. S&P 500 ARCA ba dapat? Option chain. Okay, yan yon, 416. So, nasa 417, right? We are looking at the spiders. We're seeing a potential resistance at 430 or 450. Let's say 430 tayo. All right. We think there is a resistance on 430 because the market is going up all the way. There's likely to be profit taking. All right. So, let's trade on that profit taking instinct. $430. Let's take a look at the 430 puts. How much is the put option? It's 19. It's not expensive. 430 minus 416, medyo mura siya. So yes, we can do this. 430, we buy a put at 19.85. Kahit last price lang. Of course, the lower the better. If you can buy it at 18, good job. 430 minus 416 is $14 intrinsic value. So you're just paying something like $5 for the implied volatility. I think it's cheap. Okay na rin. So all right, good till cancel. I'll buy this 1985 all the way to $10. Okay, so submit by order, accept. And I'll post another. Use on this order. Use on this order. Okay, trade again. By order 10. Okay. You will post a lower put option price if you think that the market can continue going higher para cheaper yung puts mo, no? So obviously, I like to buy a cheap put option. We buy a cheap put option to be our insurance in case the markets fall. Okay, so that's what you do here in the S&P 500. You are nearing resistance. You are not near support. So what you want to be preparing for is the opinion that if it starts topping out, then you have a put option to protect you. Apple, it's doing 151. Do you want to buy a put option on Apple? 155. All right, let's take a look at that. You only trade options if it's in the near resistance. Si Apple, nagkataon near resistance sa 155. All right, so let's take a look at the July Apple puts 155. Mukhang mura nga to eh. Trade. Buy put. $8. Is that cheap? Medyo mahal, no? Pero it's still within the 5% area. Below 10% siya eh. Below 15 siya. So, okay lang. So, let's buy some $8 puts. $800 risk. All the way to $4 yan. So, we are taking an $800 cost na pwede tayo matalo. It's okay. Trade small. Just buy one contract. Okay. Buy an Apple put at 8. Buy an Apple put at 4. So, usually, I get the average. Dinadalawa ko yan. Accept. Okay, so ganyan lang yan. Okay, done. Apple puts, I buy. Of course, if you are really bullish, buy Apple puts on Apple, sell 130 puts on Apple. Why are you selling 130 puts on Apple? It's because you are trying to make a bearish put spread. You are trying to receive a premium on Apple sell puts because you think na, ay, may buyer talagang Apple sa 130. You are bearish here, but you are thinking that there is a buyer here to lower your cost of put option. Sometimes I do that, a bearish put spread, but in this case, I would rather just do it a defined risk wherein, okay lang, I just buy an Apple put. Total $8 lang naman. So, the question is, do you take the money and run or do you stay in the trade? My answer to you is, do you know how to do options? If you don't know how to do options, usually as a stock trader, all you do is, ay, topish yung market, take the money and run, just go to cash. But if you are an options trader, you know na, uy, may stock position ako, I can hedge my portfolio by placing a put option, $800, bili ako ng Apple puts. Yung Apple puts ko, it will print money for me in case my longs go down. You can stay in the trade, lalo na if you think that what your positions are still gonna go higher. Kasi what if you own, sabihin na natin, what if you own uranium? No? Uranium, bullish yung galaw. Pero takot ka sa market. You're afraid that the market could tank and it could send your uranium going down. Diba? It could, diba? So what you're doing is try to make an uncorrelated trade wherein I'm still gonna go long my uranium, I'm still gonna go long my silver, my commodities are strong, right? Mataas yung mga commodities natin. But ang problem natin is yung spider, buwisit, nasa resistance. Yung apple, shit, resistance to, malapit sa resistance. Yung Nvidia mo, shit na naman, near resistance. Okay? Sorry, dami kong bad words. But what I'm saying is that this position of taking the money and run or staying in the trade is solved by options. Options help you. What does options do for you? Again, let's repeat. Why do we trade options in our portfolio? We want to manage risk. Define yung risk ng inverse funds. Define yung risk ng call options and put options. You can now construct a unique trade with favorable risk-reward ratio to you. Lose $300, lose $1,000 because you want to hedge the longs that you want to own pa rin. You will reduce cost of an investment. Why do you need to short $22,000 of Nvidia if you can just buy a put option on Nvidia? You will benefit from the leverage and flexibility given rather than a stock position, kaya matuto ka ng put option. Take advantage by the passage of time. Sometimes, if you really want to sell a call, you take the premium, you can do that. You will improve your probabilities over time if you learn how to integrate options in your portfolio. So I repeated that so that you know how to manage. Okay, let's give you some good trade ideas. Last night, all the commodities rallied. Your uranium stocks went up. All the uraniums have gone above $50. June, July, August, all the uranium swaps have been going up. So obviously, even if I think that the market is toppish, I wouldn't want to short my uranium. I don't want to take profits too early. So what will I do with my uranium if I think that this $22 can go $27? What I want to do with my uranium is to buy more at 21 and to buy more at $20, right? This is the URA. So if I want to buy more uranium names because I believe in nuclear plants getting more than the trillions of dollars that China already has promised, and all the US also has to add their nuclear plants ambition, that means there's more and more demand for uranium, right? So what you will do here is many ways. You can simply, the usual is you just buy a uranium stock. You buy 100 shares of uranium, 22.69. That would cost you $2,000. What if you don't have $2,000? Can I buy uranium and be bullish on it with just buying the call option? Yes, sir. Yes, you can. URA. I'm bullish on uranium for the next month. So I'm just gonna buy a $22 call. O yan. How much would it cost me? The July 15 is just $1.90. Okay. For just $200, I automatically get the same 100 shares positioning of uranium. This is like a 10x leverage. Agree? Agree, guys? For $200, I control 100 shares of uranium at 22 strike. It's almost as if I'm buying 100 shares of Ura, which I would have needed $2,200 to implement. See the reason why I need to teach you call options? Because it will help you. Positive leverage yan. Okay, so if Ura went $25, what happens? 25 minus 22, automatic $300 gain. Right? So automatic yon. Yung $1.90 naging $3 yon plus a certain volatility premium. Yung $190 mo automatic naging $300. Your $200 na pinasok is up $100 at the very minimum. Okay? So you're up 50% on it. Okay? So pero minimum yan, 50%. Usually 10x move yan. If the stock went 5%, 50% up yung options mo. So you can do that for Ura. URNM, which is trading at 70, pwede mo pa rin bilhin yung URNM calls. We think that URNM, all the uranium miners are gonna go up when the prices of uranium are rising. So we think it goes $80, right? So at 60, 70, if you already have longs on uranium, URNM, let's say you only own the shares of URNM. Can I buy, Nikki, another call option on uranium? And the answer, of course, is yes. Oh, yeah. Options chain. Let's just take a look at it. July 15 ulit. Let's just do everything standard. All right. How much is the call option on this one? Is it below 10%? Yes. It's just $5.75. So, okay, let's try to buy. Sige, magtipid tayo. Let's try to buy at $5 because what if the market today is stoppish? Baka makachamba. Baka uranium goes from 70 to 68. Baka there are some people getting fidgety. Oy, Friday, take profit time. Okay, let's take the money from those who will take profit. So let's try to get in at 4.5, let's say. Kahit konting pakipot. We'll try. Oh, 4.7. I'm not sure if I will get done. So I can modify this later on, obviously at 9:30 p.m. Philippine time. But I'm just teaching you how to make some decisions, no? Na medyo probability wise, you will make some money naman. Okay, so that is your uranium, URA calls, URNM call option. So what is a call option yet again? You can buy a stock at a set price. I showed you how to buy an at the money. But you can also buy an out of the money call option or in the money or ATM. What is an in the money call option? If you buy a 60 call, 70 minus 60 is in the money by $10 automatically. So in the money calls are less volatile. An at the money call is a 70 call. An out of the money call is an 80 call. Ito naman sobrang mura lang, $2 lang. Okay, why will you buy a super out of the money call option? Because number one, you are very bullish. You think that this 70 will go to $80 by July 15, such that this $2.25 can go automatic, baka maging $6, $7, $8 yan. You're going for a YOLO trade. Is it advisable to do out of the money call option? Personally speaking, it's not advisable. But if you're gonna take a lotto bet, we call it a lotto bet, lottery bet, okay lang. Parang sige, lagay natin yung $200 ko. If I'm down, it's okay. Ubos $200 ko. But if I'm right, $800, $1,000 of reward. Usually, an out of the money call option is very risky. But yes, you can do one call option. Out of the money calls, you try one out of the money call, you try one in the money call, and you try one ATM call. Out of the money, in the money, at the money. It all depends on you. But it really depends on how bullish you are towards the stock. Now, why am I saying na medyo toppish yung market? Aussie dollar, take a look at that. Not saying that the rally is over, but you are near a resistance. That 72 cents is a resistance. Therefore, your profits in the market have to be trail stop for unavoidable volatility. Why will there be volatility, guys? Because people are making money. Some people will take profit. Okay? Remember that. Some people will take profit. Your gold is also nearing resistance here at about $18.75, $18.90. That means that silver might actually have some resistances here at $22.50. They are directly correlated. However, I have to say that gold and silver and uranium and oil, usually they're inflationary hedges. Therefore, my view is that, all right, there might be some profit takers, but the dips will be shallow, and I would like to buy more dips of gold, of silver, of uranium. Now, a lot of people are looking to continue shorting continue shorting Cathy Wood ARK Fund because of her mismanagement of her fund. So you can see that SARK continues to go up and away. ET has already dropped to $60. Now, of course, SARK can go 51. If you're really looking to buy SARK, I would suggest to you buy SARK at about $50 para mas convenient. So SARK, ganyan. If you want to go long SARK, $50, we can go call option chain. Okay, so $50 calls, July 15, $50 call would cost me how much? Baka mahal lang. 11. All right, so let's say we want to buy at about 9. Pila ka lang, $900 risk. So what did I do? For $900, I automatically am buying around 100 shares of SARK. My option gives me the right to buy SARK at 50. 100 shares yon, $5,000. But my option play today is just $900. Yun yung maganda sa mga call option. You're just paying a small amount for getting the same leverage risk. Okay? Okay, so that's like SARK. Okay, I showed you how to do that. Okay, will ARC rise? I think, yeah, so far, because the market has been pushing anything regardless of earnings. We saw how ARC has been buying so many names na pangit yung earnings, like Coinbase. They bought bad earnings of, they bought what? Roku, nag-bad earnings. And then Roku had good earnings. At least Roku had good earnings. Pero Shopify had bad earnings. Yun. Medyo si ARC right now, they just buy any earnings company kahit bad. Like, they bought, I think, Roblox and Unity kahit na nag-bad earnings. We would argue na there are companies na bad earnings na pwede tayo mag-contrarian, but ARC has been, in my view, medyo sloppy ngayon eh. They've been sloppy. They've been buying super bad guidances, super bad earnings. But as I said, the market has been pushing anything today regardless of earnings. So the ARC has been rallying, but here about $60 or $50, there's a ton of resistance here. So can it rally from 45 to 50 or 60? The answer is yes, but you have to make sure na here about 50 to $60, take a look at the potential resistance there. Okay, how about Disney? Let's talk about some mga positions that are big caps. Disney has been rallying from 100 to 110. After earnings, nag-retest yan. We think that Disney here is actually a good risk reward. It can rally to 130. So, what can we do here? We can sell puts at 100 and we can buy 110 calls. That is what you call a risk reversal on Disney. By selling put, you receive a credit. By buying calls, then you pay for a certain pricing, right? You can also just buy an out of the money call option on Disney if you are super bullish on Disney. Why are you bullish? Because of reopening, a lot of movies getting back, like Top Gun, malakas yung mga movie sales. So you're of the view that the Florida issue is gonna be forgotten, or it's not gonna be as big of a problem. So of course, let's say if that is your view, you look again at Disney, go to Disney, pick the New York Stock Exchange option chain. So if you are very bullish, you could do two things, no? You sell put and you buy call. Let me teach you how to do that. If you sell a put on Disney, that means that you are authorized to pay $10,000 and receive a credit today of 1.46. That's just 1.5%. Maliit lang yung makuha mo ngayon. But you are buying a call option at 5.4. So 5.4 minus 1.46, roughly you're paying just $4, no? So minsan nakakachamba ka eh. Actually minsan, pwede yan, hindi ka lalabas ng pera. 1.46, eto, 120 oh. Zero cost, di ba? Parang pwede ka pa niya bayaran eh kung 150, 150 kung same cost yan. So yan yung sell put buy call, risk reversal na credit minsan yan. Minsan mura lang yung 120, baka mag $1 lang yan. Babayaran ka pa yan ng 46 cents. Let's say gusto ko mag risk reversal play, sell put 100, buy call ng Disney 120. Pero I don't want to pay. Pwede ba yon? Yeah, pwede natin in negative risk reversal yan. Negative 0.5. Meaning, I want Disney to pay me 50 cents to make this. Possible yon. Kasi mas malaki yung credit. If yung Disney bumagsak from 110 to 105 yan or 107, babagsak tong calls nito, tapos tataas yung puts na credit, makukuha mo yan. So, i-GTC mo lang yan. Buy, credit, submit by order. Accept. Accept. What's the notional value at risk here? $10,000, guys. Kasi sell put 100. Okay? Alright, that's one way to handle that. Last but not the least, okay, so Walt Disney, why am I buying here? Because that is a 5-year support. Okay, we're doing risk reversals here. Sell 100, buy 110, 120 calls. Okay, you can do so many ways. There's several ways. Risk reversal, you can do a sell put 100, buy 105. You can buy 7 to 6. That's also a possibility. Disney combos. How about C Limited? Let's talk about our favorite growth stock, C Limited. Very good earnings recently and made a rebound, retest at $70 all the way to 83. The problem at 83 is that it is 20% above the 70 area. So people can actually take profit at 83 and then they will try to rebuy at 76 or 75. So there are several ways to do this. Right now, the 85 calls, if you're buying an OTM call option, it's 5.8. Let's say you think that the market can give you an entry price here at 2.9 or $3. Then what you will do is just simply buy C Limited, maybe June 24, itong 580, mag-haggle ka ng price ng $4 or $3. That's one way to handle it. Yun. So I talked about AMD, Nvidia, very topish. We're looking to buy a put option there. Semiconductors, we're buying a bearish SOX S for a call option. BERZ, BERZ, this is an inverse fund. We are looking to look at the buying area to 23 to 27. So matsyag-matsyag na yan. Prepare yourself. Shorting ideas. What will you short if ever the market is stoppish? I like to short consumer defensives, inflationary problems yan for Walmart, Target, MO. Let's talk about the consumer defensives. We talked about shorting XLP. The consumer staples, all right, we're looking to short these issues, no? So XLP, you can just do a short on the ETF or you can just do a traditional short on Pepsi. You can see naman, nag-short tayo dyan, Pepsi. We're shorting KO, shorting on Coca-Cola, here about 66. You can just buy a put option. You can short Hershey's at 220 puts. Mura yan. Gusto nyo ba ng example? Okay, let's give you an example. Let's say KO. Coca-Cola. All right. So to implement a Coca-Cola put, it's very easy. Look at the resistance. It's about $66. So you just simply buy a put option. KO, go to the option chain, buy a put option, strike of 66. Tapos July 22. Buy puts. Mura lang 1.91. So buy put. Ay, 62 ginawa ko. Sorry, hindi ko nagawa 66. Okay lang. Kasi, okay lang. July naman yan eh. Okay lang. So, that is an at the money put option. Ang 66, that is an in the money put option. Ang 62 area, that is an at the money put option. Okay lang. Sige. Mura lang Less than 3% yield. So, sige. 1.9. Buy a put option on Coca-Cola. Good till cancel. Submit by order. What exactly did I just do there? I have a put option, the right to sell Coca-Cola at 62 until July 22, 2022. You only do that if you are bearish. Okay, so that's consumer defensives. There's so many ways to short consumer discretionary. An example would be Capri and PPR. So we're looking to bearish move done. So tapestry, why are we bearish? Mga Kate Spade bags. Bakit? Wala na ba bumibili ng bags? There's actually a lot of people buying bags, but we just think that this is toppish, no? So here about 36, we can do that. Okay, let's go to TPR. Put option tayo dyan. Tapestry, stock option chain. 36, put option tayo dito. Paulit-ulit lang, no? Okay, 37.5 trade. Buy a put option. Ayan, 3. Let's say, I'll post lang. Post buy. GTC. Submit. Okay. Cryptocurrencies and miners. Okay, I want to short here si Coinbase. Kaso, I'll tell you what, mahal yung volatility. I want to short 95 sana. I want to short mga Mara and Riot. Pero mahal eh. Mahal yan. Or gusto mo mag-short ng MicroStrategy, mahal din. They're charging mga 50% premium. So, sa kanila na, di ba? Wag na. Doesn't make sense to short something if you're asked to pay a 50% premium. Parang GME, 100% short rate. What's the point, di ba? So, why am I telling you that? Pwede kang bearish in a position pero hindi ka makapag-put option dahil sa sobrang expensive niya. MicroStrategy is one of them. I'll show to you. Let's say 300 puts tayo. Magkano yung 300 puts on July 15? Obnoxious to mag-charge eh. Okay, $80. So, that's about 20%, no? 240 ngayon. So, may automatic na in the money siya ng $60. So you're paying 8% premium. Hindi na siya as ballistic as before. Dati ballistic mag-charge yan eh. Let's take a look at the 40 puts. 240 puts. All right. Yung 240 puts nasa mga $40. So nasa 15% yield. Usually I would pay only $24 for it. So mahal pa rin siya, guys. So kahit na gusto ko mag-put option kay MicroStrategy, dahil mahal, pila lang. Post lang, no? Baka hindi madan. Sorry. Mahal eh. I wouldn't make a put option on that if it's expensive. Okay, so semiconductors, nagawa na natin yan. NVIDIA, AMD. Biotech names. If we are bearish on biotech, you can do that through Lab B or ARCG. So yan, you can buy Lab B, you can short ARCG. So a downtrend yan, no? So short yan. So you can just buy a put option at $40 on ARCG. Okay? That is enough. I've given you so many ideas. There's more. Okay, ito, marami pang shorts dyan. I'm looking at the potential resistance on pin 202 here, about $60. Sige, I'll give you ideas. Looks like there is a topish formation here on 55 for pin 202. Looks like si Live Nation, if it rallies 105, good entry to short. Booking Holdings nearing resistance, baka 24 to 27. Let's wait for a rally and the gap down. Dito sa 25 might be a good entry to short. Pero mahal kasi to eh. $25 stock, mahal yung puts niyan. So mahirap gawin. Dutch Brothers, maganda to short siguro sa $50, no? So we're waiting for a chance to sell. I'm waiting for the RSI, Relative Strength Index, to rally about 60 to 70 bago mag-short. So I'm waiting for a rejection. Okay, so that's my view. I hope you learned something. And thanks for watching. Ay, may tanong. SCO. What is SCO? What's SCO? Or are you talking about crude oil? I'm not shorting crude oil. I'm not short. Usually hindi ko binabantayan. So this is an ultra short crude oil. Why will they short crude oil? Oil is going up. Kaya siguro talo sila for shorting crude oil. Crude oil is going up. I'm bullish on crude oil, but I'm not bullish to buy now. How do I implement my bullish buy on crude oil? Usually, when I want to go long energy, so we talked about yung mga oil drillers, sobrang lakas na eh. Yes, BOR has gone up, no? So at 660, pwede mag-drop ng 550. But I am not matapang. I'm not brave enough to short oil. I'm not brave enough to call the tops on BORR or Este. Ayan, no, nasa topish formation yan. Mataas. You can take profit, but I wouldn't short it. I wouldn't short oil. Profit take, yes, pwede, but don't short. That's my view on oil. Don't short because there's really a strong shortage in oil. Mahirap makasource ng oil. So I wouldn't short this one. Oil is trading at 116. What he's saying is that what if we short oil daw sa 116 to 125? I think it is very dangerous. So do not do that. I wouldn't do that. Okay. SCO long is bale magso-short ka nga ng oil. I don't think that is a good risk reward trade. It's very dangerous in my view. So I wouldn't do that. When you look at the inventory pile of oil, sobrang baba. So chances are I am of the view that oil would stay above $100 for the next 6 months. So wala kang risk reward. It's not as good. I wouldn't try to call the tops on oil. That's just my view. Okay, so thanks for tonight. Thanks for listening, guys. I hope you learned something. I hope you learned how to control your greed. And I hope that I helped you using options to potentially make some money in the market, either implementing puts, implementing inverse calls, or if you're bullish, like I'm doing a bullish call on uranium, I'm buying uranium, URA, URNM. There are still a lot of positions that you can buy. Obviously, I didn't go all the way to tell you all the longs that you can make in the market. But yeah, there are some longs that I discussed pala, like Disney. But I think that like C Limited, maybe you can buy it at $75 if it drops or 80 below. There remains a lot of opportunities in the market, but you have to keep yourself hedged, i.e., or if you're not hedging, at the very least, you need to be flexible. Where is it? Is it near resistance? If it's near resistance, I should learn to sell and tame my greed. If it's near support, you can buy. That's all I'm saying. All right. So see you again next week and have an awesome 10x day. Bye-bye.